I'm Kals, and welcome to The Comparable, the series in which each episode spotlights two companies building similarly in two different emerging markets. For our third episode of season 2, we're digging into the very complex and fragmented sector of logistics. Logistics is the backbone of global trade, how we move goods and products across and within borders. Logistics is also quite a wide sector. It can include the movement of freight and cargo, how we store and warehouse goods, how we transport and deliver it in its last mile so you get it at your doorstep. For this episode, we narrowed it down to a spotlight on trucking and freight. This space is focused on the transportation of goods via heavy-duty trucks over extensive distances, primarily servicing manufacturing, retail, and logistics industries. You can only imagine how broken this legacy industry can be, especially in emerging markets. It's mostly paper-based and phone-reliant, it's heavily relational, and it's very fragmented, which means it presents an enormous opportunity to be digitized and transformed. For this episode, we're spotlighting two players doing exactly that in their respective markets. Truck-It-In in Pakistan and Cargon, which started out in Georgia but is operating across the region. Truck-It-In launched in 2020 by Sarmad, Raza, and Heather, three co-founders who also worked together at Careem and were part of the so-called Careem Mafia. They sought to digitize Pakistan's $25 billion trucking industry from the ground up. First by launching a trucking marketplace or brokerage that connected shippers and carriers, and then layering other core products like a transport management system or TMS, and are actually now moving into trucker financing. Their vision is to own and digitize Pakistan's supply chain end to end, and have raised over $17 million from players like Global Founders Capital, Fatima Gobi Ventures, Zain Capital, and us at iDive Ventures. So yes, as another disclaimer at the top of this episode, I am an early investor in Truck-It-In. Cargon was founded in 2019 by three childhood friends, Nico, Vano, and Shako. Cargon is a Georgia-based freight forwarding startup that connects companies that export and import goods with the carriers who move it along the modern-day Silk Road, guiding them through the whole process, essentially a flex port for Central Asia that represents a $40 billion opportunity. Interestingly, U.S. freight forwarder supply chain player Flexport is actually also an investor in Cargon, along with players like Sturgeon Capital and Hustle Fund, which all invested in the company's $3 million seed round in 2023. While Cargon started as a digital freight forwarder, they've evolved into other products, including most recently financing. This is a complex space that isn't for the faint of heart and needs resilient founders who aren't afraid to adapt quickly, especially amid geopolitical conflict and macroeconomic uncertainty. We'll be speaking to two of those founders today, Sarmad at Truck-It-In and Nico at Cargon. So let's jump in. We're talking trucks, borders, and the messy, unglamorous business of freight with my guest today. Sarmad Farooq is the CEO and co-founder of Truck-It-In, which is digitizing and disrupting Pakistan's $25 billion road freight industry with plans beyond the market. Nico Thurbalizadeh is the COO and co-founder of Cargon, a digital logistics startup that modernizes freight transport and supply chain operations for shippers, carriers, and multinational clients across the Caucasus, Europe, and Asia. Cargon was actually launched from Georgia, but has additional offices in Kazakhstan, Azerbaijan, Armenia, and Uzbekistan. This is a meaty episode on a pretty complex topic, so I'm excited to dig in. So guys, welcome. This sector is notoriously fragmented, broken, and complicated. For both of you, I would love to understand a little bit more about why this was the problem that you chose to tackle and what backgrounds did you and your founders uniquely bring to the table when building Cargon and Truck-It-In respectively? And Nico, maybe we can go first with you. I know you and your co-founders have been childhood friends, so I'd love to hear a little bit about that journey, why this was the problem that you guys wanted to tackle, and then Sarmad would love to hear from you as well.
Yes, thank you. As you correctly mentioned, this is a super fragmented industry, and that was one of the biggest reasons why we looked into it. Me and my co-founders, Wano and Shako, we studied together in the UK, and then had different career paths. Me in consulting, Wano in finance. Shako was the one actually that did trucking. So they had a trucking business with his family. And we met in Georgia once. We discussed discussed trucking. I was consulting back then. I was consulting one of the largest logistic companies as well. So we discussed trucking in detail, and it was a time of Uberization of everything around us. So we said that why not try to bring this model into trucking, and that's how we started.
That's great. And Sarmath, for you, also, I don't know if this is interesting also that Cargon and Truckadin both have three co-founders. You guys also go way back. I know the three of you pretty well, and I love the dynamic between you guys, but would love also, you have a great journey into this space. So would love for you to share a little bit more about that. And then also, what brought you guys together to build this?
Cal, when we started at that time, so we were looking for a sizable opportunity within the Pakistani market. So there were obviously three things that we were looking at. One, the problem should be sizable. Second, it should be a high impact industry. And third, where our core competencies are more suitable. So once we started at that time, all of the co-founders had a complementary skill set. All of us have worked in the logistics sector before. So we worked in the mass transit, obviously, while enabling through technology. We worked in the last mile delivery sector as well. Then we worked in the ride hailing sector as well. And if you look at the Pakistani market, it was a high friction market. And it was that time in the market where once we started, people were not buying a lot online. So online penetration or adoption was very low. So imagine somebody in the ride hailing was sitting with a completely unknown person, the female in Pakistan, especially the kind of social setting that we have. So within that, obviously enabling this kind of a business through technology, it was a high friction market. There was no proper digital penetration at that stage. So building trust along with the technology at that time was the most challenging part. So all of us had a very good kind of experience in different domains as well. So for example, if you look at the co-founders profile, so we worked in product, we worked in the strategy, we worked in the commercial side, operation side, and the finance side of the business. So we have the core competencies and the complementary skill set needed in order to go after this market. So these were the few reasons I think we started at that time.
Now, I want to dig into this, right? Because Nico, you mentioned the Uberization of a lot of different things. And, when I first started investing about 7 years ago, there was always a Western comparable equivalent to what people were building. And it was a lot of times was the Uber of X. And a lot of the models that were coming up a couple of years ago around this time was, the Uber for trucking freight. I think every emerging market had a version of this. You guys could be described as that, but actually, I think what's interesting and what I'd love to hear from you both, and maybe Sarmath first, how are both of your models different and more nuanced from that? When we were talking about the Uber for X or, trying to just photocopy what was happening in the West into our markets, what do you think most international investors and other players that were just trying to be the Uber for X, what do you think that they got wrong when they tried to simplify your space, which is so notoriously complex? What did they get wrong when they were trying to simplify it down to that comparison? So Sarmath, if you want to go first, and then Nico.
Once we started in the Pakistani market, so at that time it was all about price discovery. The market was completely fragmented. There were multiple stakeholders and a middleman involved even in the price discovery at that time. So we started off with the Uber for trucking at that time, and that's what people wanted to hear about. That's how they associated the business with the Uber for trucking. But honestly, whenever you get into the trucking, it's not about Uber for trucking. That is a very smaller initial part, and that doesn't digitize the market. That doesn't change the market. That wasn't what exactly we started this business. So then we realized that the market nuances are very, very different. And it's less of a trucking business than the balance sheet business. So you have to get into the financing part of it. That's where we started to understand what exactly the cost of capital is. We started to understand the taxation part as well. Then obviously, if you are within the Pakistani economy, there was currency devaluation at that time as well. So if you look at all those aspects, so then we started saying that trucking is not an operation or fulfillment business. This is more about a balance sheet business. Then we started bringing the financial discipline to it. So
if I compare my trucking experience with the Kareem's experience, obviously it was a high friction market. We learned the operational stamina at that time, what needs to be done in a high friction market, especially where technology penetration is not there, digital adoption is not there. So obviously in that regard, it helped us a lot. But once we got into this, so it was way more than that. It was more about bringing the right kind of data layer, then digitizing the supply chain end to end, building the right kind of operating system.
Nico, I want to hear about the Uber comparison, but ultimately, you guys have also called yourselves the Flexport for Central Asia. I know Flexport's also an investor on your cap table. What does that comparison maybe get more right than maybe the Uberization model and how you guys have applied things to how you're doing it with Cargon?
To be honest, we also started when we first thought of this idea. We wanted to build an Uber, as I mentioned before. Yeah, we wanted to build an Uber for logistics. But when you look at the supply chain, and especially international supply chain, so most of the shipments that we do, just to clarify, we do cross-border shipments. So obviously, what Uber and taxi industry in general does is finding a car. Yeah, finding a truck is a small percentage of what's needed in supply chain. And we understood it shortly after we launched the very first version and completely rebuilt it then, because we understood that, okay, there is finding a truck, but after this, these companies, and it doesn't matter whether we are talking about large corporates or smaller companies, SMEs, it doesn't matter, because all of them need more value on top of finding a truck. Because finding a truck is pretty simple process. Yeah. Yes, it can be digitized, and it is right now in Cargon. It is very much digitized, but the process itself is not that difficult. Yeah, digitizing the whole process is difficult, and that's what we've been building in Cargon. So apart from transportation, there is document e-doc and exchange of e-docs. There is insurance, there is customs, and financing infrastructure as well, because the payment terms differs between shippers and carriers, and we need to bridge that gap. So building all of this infrastructure has taken a lot of effort and a lot of our time developing our products. But I think that trucking or any other mode of transport in logistics cannot be just simplified down to Uber. And you mentioned Flexport. Flexport, yes, it is indeed one of our investors, and we are more like Flexport, because what Flexport does is it facilitates the whole international supply chain for their clients. Bringing together shippers, carriers, but also like operational experience, infrastructure, financial infrastructure, insurance, customs, everything together within one platform. That's what we do in Central Asia and Caucasus.
Thanks for that. And, both of you have talked about this already, and I want to dive a little bit deeper into this about you start with something that is seemingly the problem to solve, and then you realize that the actual problem is so much deeper than that, and there's so many more elements or products that you have to build in order to solve the whole problem. And Sarma, Truck It In has evolved considerably since you guys first launched, right? From being kind of more of a trucking marketplace to launching a transport management system, launching other products. Can you share more about the evolution of you guys over the last few years? And what these new product lines that you guys have been developing, what does that mean for your bigger vision?
Once we started, obviously we were doing more Uber trucking in the market, and then there was economic downturn. After that, we realized what exactly are we going to solve in this market? Where are we going to create the value in the market? Because the value at the end of the day was missing. So then we went more deeper into the supply chain and realized we were digitizing the market from the supply side, but the kind of market that Pakistan is, you need to digitize it from the customer side. And then we sat down and evaluated a few options, whether we need to build all of this by ourselves, or is there anyone in the market who's doing something really great and which is just staying under the radar at that time. And fortunately, we had a few options. We had those conversations. It took a lot of time. And there were a few conscious decisions. For example, are we still going after the equity capital raise in a tough market like Pakistan? Are we chasing those vanity metrics? For example, a lot of people within Pakistan, whoever were operating in the B2B space, they realized that it's all about growth. And whenever they talked about growth, it's about giving discounts to the customer. The kind of market that trucking is, foundationally, inheritedly, it has positive unit economics. So nobody within Pakistani market needs to give discount to work with the customer. You only need to bring some kind of value while you are acting as a service provider. So obviously, while we were having all those kind of experiences, so we had some kind of conscious decision. So whether we need to build it by ourselves or we need to find something if somebody is doing really great. So there were one company who was doing really great, who had digitized way better than us, who had digitized way better than anybody else in the Pakistani market. So we were the market leader in trucking marketplace while we were operating. But then we realized actual digitization, the kind of data, the valuable data that they have. So then we started engaging with them. It took a lot of time. We stayed in touch. And then obviously their vision and our vision made a lot of sense. The combined company made a lot of sense. So then we acquired that one company, which was the transport management solution. And then we enabled them. We got the FPR integration license as well. Then we acquired another company which was doing the last mile delivery in Pakistan. Again, they also had built a very good business within Pakistan. They had a very sizable market share as well. So at that time, we thought about going deeper in the market, but staying within the logistic, making sure there are certain stakeholders where you need to digitize. There are certain data points which Truckitin is not capturing. At the end of the day, if you want to create the real value, and you are missing certain stakeholders, and if you are missing certain data points, obviously you can't digitize the end-to-end sector. And that's where then we realized that we had got the foundation and we have got billions of data points through that transport management company. That's a market leader right now as well. And then we build few more products on top of it, because we build the supply chain infrastructure and the supply chain fintech rails within the Pakistani economy, because it's unbanked, it's undocumented. The kind of documents that exist in the supply chain, which people relay from one stakeholder to another stakeholder, those assets or those paper-based assets are not treated as assets whenever you're going for formal capital lines. So we made sure we digitize those documents, make those documents as assets within the Pakistan, and then those assets get then financing from the banks as well.
Nico, for you guys, and Sarmad was kind of touching on the financing piece. Cargon has also evolved since you guys first started, from being this digital first freight forwarder to launching your own version of a transport management solution to now moving into financing. Can you share more about the evolution of your product roadmap and what drives that direction that you guys have been going?
Yeah, sure. We've always had products for shippers and carriers. Obviously, when we started, so we had a product for shippers that allows them to book a shipment, track a shipment, and everything. So what you'd imagine in digital freight forwarder, yeah, we had all that. And on the other side, we had mobile apps and carrier platforms, to access the load board, take the shipments, bid on shipments, and so on. But then we understood that, okay, unlike actually Mohammed, we understood the need that we need to bring more carriers and engage with carriers more through the tech than with shippers, because I think that our client, our customer segment differs a bit. Please, correct me if I'm mistaken. We are working with large corporates with regular shipments such as Nestle, Mondelez, Pepsi, Coca-Cola. So these kind of companies, they already have their TMSs in place. What they need is actually what the supply side of our marketplace provides. It's efficiency, it's speed, and it's transparency. So that's why we concentrated on that. We concentrated on digitizing the whole flow for carriers. So that's why we brought CRM, for example, for carriers, because there they can manage their own shipments and also get access to our shipments. So we try to roll out products that would enable us to cross-sell, but at the same time always having these carriers within the platform. Whatever they do, if they do their own shipments or whatever they do, they would still be within our ecosystem. And one of the structural problems, I think that it's all the same within logistics throughout the world. It's a financing problem and gap, cash flow gap that the market creates. And it's obviously a structural problem in our region as well. And we first of all, we wanted to create a product that would enable us to bridge that gap, because on one side we had Nestle that wanted 90 days of payment terms, and on another side we had a trucker from Georgia who wants to be paid upon delivery. So somehow we needed these two to meet, and that's why we introduced Cargon Capital. It's a UK-based subsidiary of our company that basically finances, much like factoring, finances all these receivables, and therefore our carriers get payments on time upon delivery, and shippers gets to have extended payment terms. But apart from that, we see a lot of different things that is possible within financing. For example, inventory financing. That's one of the things that we're thinking about, because we are in a unique position to actually de-risk transactions, international supply chain transactions, because we are the ones carrying this cargo. For example, any imports from China to Georgia or from China to Uzbekistan, we are the ones in possession of the cargo. Therefore, we are the ones that could de-risk it. And we are thinking about this product to roll out on our own, through Cargon Capital, or in partnership with local banks, just the risk factor. So I think there is a big future in the financing infrastructure within supply chain. And it's different. It can be a lease for trucks. It can be the area for financing, because all of these countries that we operate in, and the logistics itself it's underbanked, unfortunately, and we are in a good position to provide financing services for the sector.
You mentioned Cargon Capital as now a subsidiary that is moving into this space. I know you guys have mostly raised equity financing in the past. Is Cargon Capital, are you guys raising debt for that piece of doing the types of financing products that you mentioned?
Yes, we raised that, and we've successfully raised that in the US, by the way. It's we provide financing with our own capital.
That's great. I want to talk a little bit from a zoom out perspective about geopolitics, macro conditions. It actually matters a lot in your industry and impacts and influences both of your businesses significantly. And Nico, I would love for you to go first in terms of, how the Russia-Ukraine war changed things for Cargon, and how did you guys adapt to meet those challenges? I know in some ways it's actually been a boom for you guys. So I would love to understand how you guys have navigated some of those macro conditions or those geopolitical challenges.
Yes. So the good thing about the marketplaces is that we reflect the market conditions. So we are in a position, for example, in Russia, Ukraine, the routes have changed. We adapted to these changes, so we follow the market. That's a good thing. We do not absorb all of the we do not absorb all of the problems caused by local conflicts or so on. These costs are ultimately paid by shippers or partially paid by carriers. Yeah, the same. I would say that when the Russian-Ukraine war broke out, it always had this short-term effect on marketplaces, and it had on us as well. That initially the demand decreases because everyone wants to understand what's going on. How do we adapt to this situation, including us, of course? But in the midterm and longer term, and considering that we are positioned throughout the middle corridor that avoids the Russian route, and it had actually a positive effect on the demand for us. Same with the Iranian conflict right now. So it did have a short-term effect because of the prices. Fuel prices increased, carrier prices increased. Some of our contracts, we had contracted rates, so some of our contracts we couldn't provide the pricing that we were agreed on, and it had just a short-term effect until repricing period. And once the repricing is in, then we see the recovery of the market. So we may absorb very short-term effects, negative effects of such conflicts and geopolitics in the region. But at the same time, I wouldn't say that as a marketplace there can be any long-lasting and even midterm negative effects in terms of demand and supply, because at the end of the day, trading continues, and businesses need to import, businesses need to export, and it's our common goal to find new ways of doing that. So, yeah.
No, that's interesting. And Sarmath, for you guys too, right? Like Pakistan geopolitically is like in this similar interesting hotbed of places in terms of being positioned near Iran, near China. The Russia-Ukraine war also impacted Pakistan, but also Pakistan's own macro conditions. A lot of the political crises slowed things down even internally in the country at some points over the last few years. How did you guys evolve? How did you guys manage some of those challenges in the last few years?
Like Nico mentioned, in supply chain, in logistics, sometimes you are a beneficiary of any kind of disruption that happens. It all depends on the kind of route that you are operating, and also it depends on the kind of customer or supply concentration that you have on that route. Sometimes it would have a negative impact on you. So, for example, if somebody is working on the Iran side, a lot of like cross-border movements from Pakistan to Central Asian countries, from Pakistan to Afghanistan. So that route got impacted. So a lot of like oranges used to get like transported to that part of the world. But once the disruption came in, obviously a lot of farmers were impacted. A lot of logistic providers on that route who were doing like road ground transportation, they got impacted. So in some scenarios within pandemic, so there were few industries, if those were your customers, if you're operating on certain route where you have very strong supply consolidation, concentration, you can dictate the buying terms. So obviously you would be beneficiary in those regards. If you're operating in a certain segment where customers can pay compelling higher prices or margins, so obviously then you would be beneficiary of those. So those were obviously few highs that we have seen, and then we were also on the receiving end of those things as well, which impacted our certain routes, certain industries, and we never anticipated that it's going to come. So if you're operating in a country like Pakistan, I think it boils down to like how resilient you as a founder are, how resilient your team is, because we are operating in a Pakistani market in that kind of a like economy, where in a lot of scenario depends on the external factors, but internally we have struggled in the past few years as well. Also, we have got immense potential, and that's why all of us are like putting all their efforts within Pakistan. But Pakistan is one of those countries which was impacted the most by these external and internal factors, our own political situation, our geopolitical reasons as well. Then you have floods every now and then you have a price volatility on the fuel side. Then you have your currency devaluation. So, for example, if you have deployed $100,000 on a customer side in working capital for Nestle, so obviously once you get your payment back, if there is a 30% currency devaluation, and we have seen this kind of massive currency devaluation in 2022, so you're getting back in dollar terms a lower value, and all of your investment, equity investment, came in dollars, and then you're reporting all of your P&L in dollars as well. So those kind of things, obviously you get impacted.
Sarmad, you just mentioned AI, and I want to kind of talk about it, right? Because I think, whenever you're in Silicon Valley, that is literally the only thing people talk about. But when you think about emerging markets, it is kind of this, I think it is what the future is. It is this like foundational layer to it. But in a lot of these economies, a lot of AI first companies is not necessarily addressing kind of the root structural problems that exist. And I would love to hear from both of you guys, because the space that you're in is a very traditional industry that is deeply fragmented. I'm curious how you both are thinking about leveraging AI, but also other technologies to optimize and maximize your businesses going forward. So Nico, I'd love to hear from you first, and then Sarmad about some of the products that you guys are building over at Truck It In. So go ahead, Nico.
Yeah. So in terms of AI, I think that one of the main, I understand the hype and everything around AI, but one of the main things that people need to understand, and I think that many IT companies do not get it right, is that you need the right amount of data to feed AI for it to actually work for you. And one of the things that we've built throughout these years of the building Cargon was an infrastructure to get this data. Whether it is for carriers, whether it is for shippers, or for particular shipments, or whatever incidents there are in each shipment, when they appear, when things should be escalated to managers, and everything, every rule. And right now, I feel like we have enough infrastructure and enough data points to actually build a good quality AI layer on top of that. And that's what we are doing right now. So I think the biggest benefit would be from agentic AIs that would be implemented in. Right now, we have a system of 7 being implemented in different places throughout our market, within our marketplace, and assisting our ops and key account managers with different tasks. So I think that obviously it cannot be AI only at this point of time. It cannot be AI only business operated by AI, but I think that most anywhere from 50 to 80% of standard processes can actually be done and pre-prepared by AI with the confirmation, obviously, from the key account and ops managers, because that's still very much important, because we cannot be 100% sure of how different AI agents in different sections of our marketplace would behave. That's why most of the things that we are rolling out would still be escalated to ops and key account managers for verification before being sent out to carriers or shippers. So I think there is a big future for AI integration in supply chains, and much of the operations can be actually assisted or even fully completed by AI. If of course you have enough data to feed it, and the quality data to feed it with.
Yeah, I think that's a really good point. Sarmad, what about for you guys? It probably sounds a bit similar, so would love to hear how you're thinking about it too.
Yeah, I think in terms of direction, I think it's pretty much the same. But the best part is like we started building that foundational layer in 2023, 2024, 2025. So now we have the right amount of the data. We have the sizable data. The quality of data is really good. So for example, not even a single company in Pakistan owns the data of that size, the quality of that data. So that's what we own. And also, one way people think about AI is, for example, what it is going to change. And another way of thinking it is like what it is going to not change. So, for example, in our industry, the best part is it's not disrupted. Any individual sitting at his home is not going to build an AI tool and deploy it at Nestle, because you have longer sales cycle. You need to have it's just a context heavy business, and it's a very fragmented business. So already within those organizations, they already have different techs deployed. So you need to have a single data layer. You need to do integrations. You need to have business context. You need to understand the business processes as well. And then you need to obviously wait for those longer sales cycle as well, where you're speaking to CEO, CFO, CDO, so director supply chain. In logistics and Uber for trucking, you only go talk to logistic manager or director supply chain. Here the game changes. So you are talking to the high ups, and once you have their buy-in, and obviously they have that AI and digital transformation narrative in place, and they want to change their organization going forward, they have that 10 to 15 years of their digitization goals laid out. That's where you can go in and then be the tech layer and enable them. So obviously for me, for us as an organization, it's less about the AI, it's less about the technology and the tools. That would keep on changing. So what matters more is what exactly we want to solve. So if we need to bring efficiency, if we need to do more with less, so that's where we are more focused. So for example, a lot of resources have been wasted within supply chain. So there are a lot of empty miles, downtimes, then undocumented economy. If it is documented, it is documented through paper-based. So making sure that you lay down the digitization rails, you lay down that financial rails in place. And obviously, AI is one of the smartest tools that you can use.
That's a good note for us to end on. Wanted to say thank you to both you guys, Sarma and Nico, for joining today. This is a super complex space, but to hear how you guys are navigating it, how you're breeding resilience within your companies to a lot of things that you can't control in terms of the geopolitical situation, the macro situation, super inspiring. So thank you both for being here today.
Thank you.
Thank you, girls.
That's it for episode 3 of season 2. I hope you enjoyed listening to this episode. It's kind of complex as a topic, but I think it's actually a really important space to understand, especially if you buy anything online. I mean, you have to understand how complex logistics can be from end to end. And to be able to spotlight 2 players that are on one piece of that supply chain, I think is really important, especially given how big the opportunity is to really transform that industry. What I really loved about speaking to both Nico and Sarma is that, we had this really great conversation about the Uber for X. And I think one thing to keep in mind in emerging markets is that we had an initial wave when emerging market startups were coming up, 6 or 7 years ago, where everything just kind of became this very palatable Western model photocopy into emerging markets. And I think what we saw really quickly was that you can't just drop something in a market and expect it to work, especially given that emerging markets are so complex, it's so relational, it's so driven by people. And so you really need founders that can really get into the nitty gritty of things, that aren't afraid of meeting their users where they are and really adapting for their particular market. So I really appreciate when you meet, I think when we've had a lot of those companies come up in the 6 or 7 years, and we also had a lot of those companies die, right? Because they didn't adapt fully. And I think what's really incredible about both Truckit and Cargon is to see how they both have adapted and the resilience that they have as companies, as they've adjusted to not only the realities of their markets, but also the realities of the geopolitical dynamics of conflict, of the most recent Iran war that's been happening in the Middle East, of the Russia-Ukraine war, of the macroeconomic uncertainties. So it's a very, my thing of trying to think about how to do this was like, not only how do we distill this topic into something that everyone can understand, but also how do we really get to the meat of it? And I think another thing that's really interesting is how many companies like those two, Cargon and Truck It In, are moving into financing, right? And the need for debt and affordable debt to service this space. And so something for people that are listening to this, if you operate in this space, to really think about is that there's an opportunity here to really think about balance sheet financing, invoice factoring, working capital. That's all that can be existing in this space to actually make it really succeed in emerging markets. So thanks for listening. Stay tuned for our next episode. And for now, please subscribe, like, share with your friends. We can only keep doing this if we get more people listening and watching us. So thank you. Speak to you next time. Bye.